It is a pleasure to be given the opportunity to join you again and see many familiar faces from many years of working in the state capitol, interacting with almost all of you, and if not you, your predecessors, during my time here, both in the legislature and now at the department since 2001, the first 5 years of which were as Chief Deputy and Executive Counsel. But as you heard, I became Commissioner in 2006 and will finish my term next year, actually a little bit beyond next year, in January of 2020? Wow. But hopefully I will continue that service thereafter, but that's for another day. I am here today at your invitation to talk about the news of the hurricane season having just crossed over its peak, which is on September 20th. Talked to a group the other day and I told them that that old line about counting sheep in order to go to sleep at night doesn't work for me, but counting the days left in the hurricane season does fill those voids when I am not able to doze off. And I have different counts. I count to the peak, I count down to from the peak, and then to the end of November when it officially ends. And I used to always tell groups that actually I considered October 1 to be the end of the hurricane season, because we would get cool spells that would come down and form a wall, so to speak, weather wall at least, to keep hurricanes at bay. Not so much anymore. They are continuing into October. We had one last year, if you recall, that threatened us and ended up in Biloxi. It was, as Stephanie Grace recalled the other day, a shoo-shoo, Lanny. And I was amazed, by the way, that no one knew what a shoo-shoo was. I grew up with shoo-shoos all over the place. And it took one of my neighbors from Mid-City, New Orleans, Errol Laborde, to explain what a shoo-shoo was for those who were disbelieving. But that storm, thankfully, was a shoo-shoo and avoided creating even significant damage in Mississippi with its landfall. Not so good news happening in the Carolinas. Our friends up there have experienced a landfall of a major hurricane that had diminished to a Category 1 by the time it made landfall, but brought with it torrential rain, and that continues as we speak. And that reminded me, actually, a column I read yesterday in the Picayune, a syndicated column. Well, it was a column from the Washington Post on the op-ed page by 3 meteorologists, I believe. And they talked about the fact that what we do in the way of warning folks and advising them about approaching hurricanes really can present a disservice to the public, and how difficult it is to convey the real threat to a local jurisdiction. We're all very familiar with and dependent on the Weather Channel, and they do a great job. But their placement for visual purposes on the beach with hanging onto a pole and the wind blowing can give a false impression that that's their problem, not our problem. And we had that experience right here in Louisiana back in 2008. Hurricane Gustav came ashore just south of Houma, Louisiana. Houma had been blessed up until that time with Katrina going to its east and Rita going to its west, and the center of the coast being pretty much unaffected by both of those catastrophic events. But Gustav changed that. It came ashore in Houma, flooding from the bayous in Terrebonne Parish, hundreds of homes there, and then came straight to Baton Rouge. And Baton Rouge had been blessed as well with avoiding major hurricanes, both Katrina and Rita and others, for many years, back to Andrew in 1992, which really did the bulk of its damage, which was about $500 million in insured losses right here in the Baton Rouge area. But Gustav broke off all those old aging tree limbs and sent them through roofs in the Baton Rouge area. And then it continued up into central and then northeast Louisiana. Alexandria and Monroe saw hundreds of homes flooded with the 2 days of 10-inch plus rainfall that accompanied Gustav through its trip through Louisiana. And I make that point each year as I do my storm tour of the state, all of the 8 metropolitan media markets, all of whom are most accommodating, making their viewers and readers available to me. And it's opportune because there's so much notice and publicity about the next hurricane season beginning on June the 1st. And so I take advantage of that and carry my message relative to being prepared and how to deal with and survive hurricanes around the state. But I'll do that again here today because with your invitation, I get a second chance to remind people of the danger and how to prepare and what to do in the way of preparation from an insurance point of view, but also from a safety point of view. And that first message, of course, is heed any warnings, in particular from local officials on the ground with knowledge of the vulnerability of their city, parish, community, et cetera, and the best steps to take, whether it's to evacuate or to stay in place in order to survive successfully such events. And my first advice on the insurance level is to get with your professional. Use it as an opportunity to do an insurance checkup, as I say, with a focus on what coverage you have and what coverage you do not have. And I dare say that the majority of homeowners policy holders in our state are still, after over a decade, after 2005, 13 years post-Katrina, the fact that almost all homeowners policies now come with a named storm or hurricane or wind and hail, depending on the company, deductible. And the legislature, in the aftermath of Katrina, took the prudent step of adding to the deck page, that cover sheet with a summary of all your coverages, a additional line separate and apart from your multi-peril deductible if you have such a named storm, hurricane, or wind and hail deductible, in bigger print and with the calculation done for you of what that deductible is. And even with that, I'm still convinced most folks are unaware that they have such a deductible. And for 30 plus 20 plus 10, 40% of our homeowners policies, it's 5%. Not 5% of your damage, it's 5% of the insured value of your home. And that's typically about $200,000 in the state. 5% of that is $10,000 that you are required to come out of pocket for in order to repair your roof or whatever other damage you might have as a result of such a peril. That's a lot of money for most folks to come out of pocket for. I was at a meeting that Lloyd's of London sponsored and had the financial editor of Bloomberg as their guest speaker. And he had just done a column for Bloomberg News about the fact that if 40% of Americans, not most, but 40% of Americans had to come up with $400 next week to repair their vehicle, that have to go to a family member or a lender in order to get that $400. $10,000 results in a blue roof for a year or two in the aftermath of a major storm. And that comes as a complete shock to most of those folks who think they're fully covered for such events. Number two, my second point in addition to the insurance checkup and knowing what your coverage is and what it's not, is to access the National Flood Insurance Program, benefiting our state by far more than any other state in America. Since 1978, we in Louisiana have collected $19 billion from the National Flood Insurance Program, with claims paid in all 64 of our parishes. And in fact, every state in America has had claims paid during the time of the National Flood Insurance Program. But second to us is Texas, and it was a distant second at $6 billion a year ago when Harvey brought their total collections from that program up to $15 billion today. Third and fourth are New York and New Jersey, $6 billion each. We used to be greater than the next three states combined in benefit from that program back to 1978. Harvey changed that, and Florida has now joined the two Sandy victim states with $7 billion collected in the history of the program. And Florida always takes the opportunity at national meetings to remind me that historically and still today, they are a net payer into the program, not a net recipient from the program, as we are more than any other state. But that program being so important, notwithstanding its importance and all of the lessons that we have had repeatedly telling us how important it is, and I call it the best insurance buy, although it's really not insurance, it's a FEMA program, that any property owner anywhere in our state can make, commercial as well as residential. And despite that fact, when Katrina hit in 2005, we had 380,000 flood insurance policies in place statewide. And by 2008, that number had gone to 500,000. But by 2016, when Baton Rouge and Lafayette areas flooded, we were back down to 450,000. We're back up now to 500,000, and hopefully folks have learned that lesson. In the greater New Orleans area, they truly have. While our statewide average penetration for residential properties is 25%, in the metro New Orleans area, it's almost 50%. And that is as a result of the fact that we have had 100-year flooding events every 5 years for the past 30 or 40 years in the New Orleans area. So they have gotten the message and learned the importance of keeping flood insurance in place. And my third bit of advice is take this opportunity when you're thinking about it. Take out your cell phone and walk through your house and just film all of your assets. Film your flat screen TV, whatever other electronic equipment you have, your carpeting, your draperies, your artwork if you have any. All of that is invaluable when you have to file a claim. And it can be a flood claim or it can be a fire claim. You can have lost your entire home with all of its contents in a fire that makes it very difficult to document how much you had there and what it looked like and what it was valued at before the catastrophic loss. So with those things said, let me move on to the reauthorization of the National Flood Insurance Program. As you probably remember, it was extended since its expiration last year 7 times now. And the most recent extension expires on November 1st. We went through this process 5 years ago when for the first time since the program was created in 1968, after Hurricane Betsy came through New Orleans and flooded the lower Ninth Ward just as Katrina did, and flooded Chalmette and St. Bernard Parish just as Katrina did. And private insurers almost across the board and universally said, no more. We're going to exclude flood from our coverage, like we exclude acts of war from coverage in the property insurance market. Federal government stepped in and created a federal alternative, an additional program, National Flood Insurance Program. Again, like they did after the attacks of 9/11, when they created TRIA, the Terrorism Risk Insurance act that created reinsurance, federal reinsurance, for companies that would continue to write with coverage for acts of terrorism, commercial property insurance in America. Both of those programs in their original versions were done for 5 years and reauthorized every 5 years. The flood program, however, 6 years ago, expired, and there could not be, for about a year, a compromise cobbled together to extend it for a long-term period of time. The fiscal hawks wanted to put the program on a pay-for-itself, go-forward basis. And the coastal states, and we were fortunate in that event because Sandy had brought the Northeast to our side of that issue. We had always had the coastal states of Democrats and Republicans of the Gulf Coast and halfway up the Atlantic through the Carolinas. But with Sandy, we got the additional support, bipartisan support, from the New England states as well. And that put us in a position to fend off the most onerous of proposals that would have put the program on a pay-for-itself basis. But even with their support, the compromise that was Biggert Waters, when it was finally passed, reauthorizing the program for 5 years, called for rate increases over a 5-year period of time, that when we read that bill, Nancy Pelosi and the Affordable Care Act, actually in that case, she was speaking the truth. I have seen many 1,000-page bills go through legislative processes that really are dependent on staff and lobbyists and other interested groups to dig into and find out the details of. Well, that program, Biggert Waters, with the compromise to 5 years of a glide path to actuarial rates, would have rendered tens of thousands of properties all over our state worthless overnight. And the hue and cry was immediate and loud. And the group in New Orleans called GNO Inc. began trying to roll back those egregious, onerous rate increases. And I happened to be president of the NAIC that year and had a meeting. The president asked me to bring some of my colleagues to the Oval Office to talk about his area of interest, the Affordable Care Act, and actually the first extension of non-qualified plans that us regulators were authorized to do. And at the end of that meeting, I took out a letter from GNO Inc., which had chambers of commerce, legislators, mayors, congresspeople from Maine to Miami and around to Mexico and even elsewhere in America, urging a rollback to less onerous rates. The difference being, in Biggert Waters, the cap on rate increases was 25% per year, not of what you were paying, but what you should have been paying. And that was ruinous for tens of thousands of heretofore grandfathered properties. And the rollback that was ultimately signed into law put a cap, not a low cap or even a handout, but a 18% per year cap on increases for commercial and on residential flood policies, 25% on commercial. Paid for ostensibly, though not, by a $250 per commercial policy fee and a $50 per year fee on residential policies nationwide. And that was done in order to pay for the reduction in the cap that was originally part of the reauthorization called for by Biggert Waters. And with storms in Texas and Florida since then, needless to say, it has not paid for it, to the point where Congress had to write off $16 billion of the $28 billion debt that the program had in order to start paying the losses from Harvey and Irma last year. And that was done, and the program is up for reauthorization, extended 7 times, as I said, due to expire one more time. The fiscal hawks wanted one more bite at it before the new Congress takes office, so that they could have their say in this last effort to put it on a pay-for-itself course over a undetermined period of time. Let me move on to a couple of other areas of insurance interest, and then I'll save some time for questions. High auto insurance rates, biggest challenge that we have in Louisiana, has been that since I was chair of the House Insurance Committee. We did a study committee back then, and Governor Foster came with a concept called choice, no fault. It was unsuccessful. The fallback position ended up being a bill I carried called no pay, no play, and included economic only UM. It did lower premiums, 10% for liability costs, which reduced the premium tax take to the state from one year to the next just by that, although premium taxes are collected on every premium paid statewide. It was effective, but it's long gone, and rate increases are built upon that lower base from 1998 up until now. And of late, rates have been spiking again. And it's interesting to look back 10 years. If you go back 10 years on the auto side, for the first 5 of those 10 years, increased by 1% per year. That wasn't unique to us. It was a national experience. Competition was keeping a lid on those auto rate increases, and states were in competition with each other to attract business. For the last 5, however, in our state and every other state, they have been spiking upward. And it began 5 years ago with about a 2.5% statewide rate increase. And then the next year, 4.5%, the next year, 6.5%, and for the last 2, 8.5% per year statewide. And that is very burdensome to folks trying to get themselves to work and their kids to school across Louisiana. Opposite experience on the homeowner side. Go back 10 years, for the first 5 of those 10, double-digit per year increases in homeowners rates in the aftermath of Katrina and Rita. But for the last 5, as a result of a stabilizing of our market, 28 new smaller regional carriers now competing with each other for the business left behind by the major national carriers that have exited our market. When Katrina hit, Allstate had 22% of our homeowners market. They have 11 today. State Farm had 32%. They have 28. Travelers had my policy, and a lot of the rest of the state, they're down to, I'm not sure where, but probably not in the top 10 any longer. That void has been more than filled by small regional carriers who, when we flip from our insurer to another, my wife heard the savings we were going to have on our policy going from $1,000 a month down to $400, and she said, "That's great, Jim, but I never heard of that company. Are they any good?" And I said, "Give me a break. That's what I do every day. I'm not going to buy a policy from a company I'm about to put out of business." And her reaction was, "I guess not." But we saved for several years $600 a month, and are still today $400 a month less than we would have paid 5 years ago for that previous policy. And that has happened all over the state and has resulted in that 1% per year increase in homeowners for 5 years. But on the auto side, what's driven our rates and every other state's rates up, no question about it, number 1 and 1A is distracted driving. Not only is it driving rates up, it's killing American motorists in record numbers. Number 2 is the recovering economy. Cheaper gas and the recovering economy results in more miles driven. More miles driven, more accidents, more claims. And number 3, again, my wife, I bought a new Sequoia year before last year. And a couple months ago, she was backing it out of our driveway to get her car out, and I was distracting her, cutting up with something on the front lawn, and she's looking at me and laughing, and crunch goes the mirror on the driver's side on the pole in front of our house. $1,300 to replace that mirror with its cameras and warnings and flashes and arrows and all that. And I thanked her for not backing into the pole, because if it were a bumper, it would have been $3,000 to $4,000 to replace it with all the sophisticated equipment in it. So the combination of those three, distracted driving, cheap gas, recovering economy, and cost of repairs, have driven our rates in every other state upward for the past 5 years. Good news, I just approved State Farm taking a 5% rate reduction on their auto book statewide for the first time in those 5 years. And that's a third of our market. So I think the mid-year market-wide, statewide market increase is 1/2 of the 8.5% ultimate that we had last year. It was 2.5% at mid-year this year. So I think we've reached the peak, and like those, like the no pay, no play benefit was baked in the 98 era, I think we now have the distracted driving, those other factors baked into our insurance rates. It's not getting cheaper, but it's not getting more expensive any longer. Interesting side fact, and then I'll stop unless you want to talk about the Affordable Care Act, and we'll do that if you ask about it. But 20 years ago, 90% of 17-year-olds had a driver's license. Today, it's 70%. And 20 years ago, 95% of 25-year-olds had a driver's license. Today, it's 75%. It is a true cultural change in our society, and it is driven by hordes of young millennials, I guess, moving to downtown areas. We see it here in Baton Rouge. It's happening in the warehouse district in other areas of New Orleans. It used to be unique to New York and congested urban air giant cities in America. It is happening all over America now. And they get away from paying for a car, paying for insurance, paying for parking. They have a bike in their condo or their apartment. They have Uber on their phone. They have Whole Foods on one corner and a sports bar on the other. And they don't need the expense of buying and maintaining an automobile. When I was in the legislature, we used to try to tie getting a license with getting your GED or diploma to get kids to stay in school and get their high school education at a minimum. And no longer. It's not an incentive. And I hear it when I tell that to groups. I get feedback all the time. My kid doesn't want to drive. You know, they don't want a driver's license. So it's huge. It's not insignificant. Agents are seeing it, and they're very concerned about it. Their future loss of business, and autonomous vehicles are on the horizon with mom being able to program the vehicle to go pick up the kids at school and bring them home without her. And they worry about that, and I tell them not to worry, because that loss of business is certainly coming, but it will be more than replaced with cyber insurance. No question about it. So with all that said, can I answer some questions? In the aftermath of all of these catastrophes, the Air Force One occupant, whoever happens to be the president, comes down, pays a visit, and promises to be there to help them rebuild their lives. It's not an empty promise, but for the 2016 Baton Rouge and Lafayette area flooding events, the average claim for those who had flood insurance was $90,000. The average grant to those who had damage but didn't have insurance was $9,000. What the federal government does offer to those folks is a low-interest SBA-backed loan that gives them 30 years to pay for the repair of their premises. But what that does is it sucks all of the equity out of that, the biggest asset most folks have, leaving their property financially underwater for years into the future. So it's really a good buy, a very wise investment for anyone, any property owner in our state to access that program.